Good morning, traders and investors. Roger Scott here, Senior Strategist for WealthPress. Today's Tuesday. It's June 6th. The first week of June is almost behind us. Where it goes, I have no idea. Folks, it's about 7:51. The market's going to gear up to open up in about an hour and 39 minutes to be specific with you. Before we get started, I want to make sure you like these videos. Go to the YouTube WealthPress channel, like these videos, subscribe to this channel, and post comments and questions and feedback. Earnings are behind us. There's a lot to talk about right now, and let's get into it immediately. So the market's going to open up, as I mentioned, in about an hour and 38 minutes or so. Nasdaq is flat. The Dow's down about 38 points. This is very, very random action. Now remember, either end of last week or beginning of this week, actually, it was end of last week, we saw the Dow spiral up about 750 points as there was a resolution to the debt ceiling. The question is that price action going to remain, or is the market going to cool off and eat some of that back? If you look at the technicals right now, which we were going to do right now, it looks like the Dow's got some more upside, but keep in mind, we've been in a very congested channel now for quite some time. So even if the Dow does go higher, which I think it will, the upside is very, very limited unless we break out. Now, if we break out, we would have to go about above 34,200, 34,300. That would be very, very instrumental. That would be something like that. But then I would like to see some follow through. Otherwise, we would label it as algos going wild. The SPY, on the other hand, because it's been manipulated so much by the QQQ, as you will see here, is grossly overbought and I think needs to cool off. So the tech parts are going to cool off, but the blue chip parts are not. Matter of fact, this is the S&P 500 right here. Look at technology, communication, and consumer discretionary. Look at it over the last 6 months, 3 months, and 1 month, and compare it to industrial, healthcare, and consumer staples. It's like its own little world. I mean, look at this. 9% cumulative, 17% cumulative, 19% cumulative versus 9% cumulative. Versus 0.67. And then it goes into the negative. So you've got industrial with 0.67, less than 1% gain, while technology is gaining 20%. That's not sustainable, folks. And there's absolutely no good reason for it. And if it's because of AI, that's not sustainable. And if it's because the Fed's going to lower rates or keep rates steady, that's not sustainable. So I'm expecting a lot of, or at least some degree of downside in the QQQ over the next couple of weeks. And I think this is going to increase, and we're going to see the QQQ come down to the base. Matter of fact, I'm suggesting traders take a position in the Dow and fade a position in QQQ or consumer discretionary or technology, because these sectors are way, way overdone. Matter of fact, as I showed you the other day, if you look at information technology, you've got 81% trading above the moving average, and it's very, very unsustainable. Very, very unsustainable. In terms of the overall QQQ and the sustainability of it, you've got about 70% of stocks trading above. And if you look at it over time, the momentum levels really couldn't get it up. Most of the upside that you're seeing is in the FANG stocks. Most of it, like 90% of it. Look at that. That's the equal directional. Very, very little, very different than the broad market. So this is the equal weighted QQQ. This is the broad QQQ. Look at the difference. Look at how overdone it is. So I think we are going to revert a little bit lower, but I don't think it's going to be at the expense of blue chip stocks. Now, another sector that I'm starting to get more concerned about is the energy sector, and I'll tell you why. Fundamentally, and technically, actually not fundamentally, technically, it's looking really good right now. It's looking really solid, but if you look at momentum levels, they look like they have already left the building. Look at that. Also, the other problem is we had a OPEC cut yesterday. And what did the energy market do? I want to show you intraday. Look at this. Here we go. It opened yesterday. Look at this. This is yesterday. It opened high and then it went down. Now, typically, if this was about 6 months ago, that news would have been extremely bullish for the market. And we would have seen a good rally from that. But we opened up substantially higher and then we just went down. So be very, very cautious right now. If that news couldn't do anything positive for the energy sector, the question is what will. Now, We're very largely absent on the economic news today, but the market is going to give us a full swing because it's a full week. It's not a fragmented week like last week when we had a holiday, a major American holiday. So I think we're going to see some more liquidity and volatility coming into international trades in goods and services and the petroleum report, which I'm anxiously watching tomorrow. Now, let's talk a little bit about news, and I'll talk about sectors and tell you what I'm looking at right now and what to avoid. So Intel Corporation plunged more than 4% and was a top percent loser on blue chip Dow after Apple announced that its upcoming Mac Pro computer would include a new chip made in-house. That's very interesting. Energy stocks, including this is what I was talking about, Chevron, Exxon, and all the others, they retreated after oil prices paired earlier gains as concern over the demand outlook overshadowed Saudi Arabia's decision to cut production by another 1 million barrels per day. That's very bearish because that's bullish news right there, and it didn't do anything. Palo Alto Networks gained about 4%, and Dish didn't do so well as it may be replaced by Palo Alto Networks, and I think it should because I'll tell you, Dish hasn't been doing anything for the S&P 500 in a very long time, and as you know, it's my most favorite stock. Wink, wink. I hate that stock. I can't stand it. It's a real dog. Look at this thing. You got it. See, every time it rallies, it comes back down. I wouldn't be surprised if you saw me short it again later today. I mean, what a dog. What a dog, you know? Data showed on Monday that manufacturing activity fell to a 5-month low. That's not good for Fed's stance on keeping interest rate status quo, but what do I know? And adjusted final S&P Global U.S. Service Index, PMI, came in weaker than expected as well. Factory orders did okay, but not that great. We're currently pricing in a 76% chance of a no rate hike and 24% chance of a 25 basis point hike. And I actually think over the next, let's see here, we got another 8 days. I think this number may increase substantially. Europe was down a little bit. European technology stocks were under pressure, and I think U.S. tech stocks are going to be under pressure too, tracking losers on Wall Street after Apple unveiled its new mixed reality headset at a relatively high price. Everybody's talking about it. That's like the headline story on CNBC right now. Apple's new headset. ECB President Lagarde said Monday that it was too early to call a peak in core inflation despite signs of moderation. Too early. Just like it's a global economy, folks. Dutch central bank chief Knot said Tuesday that Eurozone inflation is stubborn while nodding that monetary policy is displaying indication of effectiveness. Basically, what they're saying is things are working. We need a lot more time. China closed sharply lower. That's going to put pressure on industrial and manufacturing stocks in the U.S. and consumer discretionary. Guess what most of this consumer discretionary stuff we use here is made? In China. Concerns over the health of U.S. economy while investors await the release of Chinese trade data for May. Chinese Security Journal reported Tuesday that the country would likely implement additional cuts to banks' reserve ratios and interest rates in the second half of the year to shore up the economy. They're lowering rates to shore up the economy. I want to see what we do here in the States. Japan is on a tear, ending 33-year high. Now remember, it's been in a recession for 30 years, so let's not get carried away. But data showed on Tuesday that the country's household spending fell more than expected in April, while overall wage income remained weak, bolstered by expectation that the Bank of Japan will maintain its ultra-loose monetary policy. I think they will for just a little while longer. I think as the global economy starts getting a little stronger, they're going to change their policy and they're going to start increasing rates. Today, you have to keep your eye on Smuckers. They're reporting. Sienna's reporting. Cracker Barrel, my wife, God bless her, she loves the Cracker Barrel. Don't ask me why. Dave and Buster's. Those are all the stocks that are reporting. There's not that much pre-market action. Keep your eye right now on the S&P 500. Now, as far as sectors are concerned, as I mentioned earlier, look at how technology, communication services, and consumer discretionary has just overclouded everything. I would be looking at the weakest stocks in these three sectors right now to sell, not to buy. And actually one of them happens to be Qualcomm. Yes, Qualcomm. And I think Qualcomm is going to turn lower and Qualcomm is going to go all the way down to the base. as this channel projects. So Qualcomm would be the weakest stock in the weakest sector that I think is going to happen. So you don't want to chase this strength. This is way too much, and I'm just not expecting it to move higher. So in my opinion, Qualcomm, or you can go right here. You can go to the Nasdaq. Let me show you this. You can go to Nasdaq 100. You can go right here. Strongest stocks, weakest stocks. Let's see what the weakest stocks are. So the weakest stock is Liberty Global, then PayPal. Then you've got INCY. Now, INCY looks like it's ready to go for another dump. WBA does not look very strong here. So I'm just going to give you a few. Amgen looks really weak. WBA looks really weak. INCY looks really weak. And LBTYA looks really weak. I just gave you several. So don't go buying the strongest stock and chasing this market. Find the weakest stock. So when it finally reverts, these will take it under the chin more than other stocks will. Okay, that's how you play that game. You don't go chasing the strongest. And here's Qualcomm. It looks awful. Also one of the weakest. Matter of fact, let's see how weak Qualcomm is. Qualcomm is right here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13th stock. So 13th weakest stock, 13th percent wheeler, 87% percentage on the weak side of all the weakest stock. That's pretty good. And there's several here, but these are dogs, and I'm not bullish on them. Now, for the long side, we got to be very strategic and very careful. And we want to avoid oil because it couldn't even rally on good news yesterday. So in my humble opinion, you want to get the most upside right now from industrial, healthcare, and consumer staples, these three. If we look at the S&P 500, which we will right now, and ignoring all the NVIDIA and the Meta and the AMD, avoiding all of that, avoiding all of it. Remember I told you there was going to be a breakout in Royal Caribbean? There it is. It happened. Netflix, the car parts looks really good. CPRT looks really good right here. I would say that's the strongest non-tech stock. GE looks really good right now. May need to come down a little bit more. And let's see. And Lilly looks really good right now. Stick with those stocks. Don't go crazy right now with tech stocks because we just don't know what they're going to do. And the volatility is just too much right now. So we don't want to play that game like AMD, Meta, NVIDIA. These are very large cap tech stocks. If they start falling, it ain't going to be pretty. Pulte's looking good right now. Again, I like that CPRT. Copart, it looks really solid. I like that stock a lot. And GE, you may want to wait another few days for GE. But we don't have a lot of great setups to the upside right now because tech is so overwhelming, and I'm nervous that it's going to pull back and really hurt us. So we got to be very cautious. Took a little longer today to explain what the playing field is, but be really careful because tech is really overbought at the expense of other blue chip stocks. And if they all go, tech is going to be the first one. So you want to find the weakest tech plays right now, and I'm glad I had a chance to show you some of them. Anyhow, before I let you go, I've got some really big news. And no, it's not about you going to the Wealth Press YouTube channel and post and clicking and liking and giving me feedback. That's all really important, but I've got something really big for you. I'm about to hand out my biggest gift of the year. That's right, my biggest gift of the year. Exactly 1 year ago, I launched my flagship algo trading program. And what a journey it's been. Man, it's been a journey. It's been a ride. Despite all of the market turmoil, all the craziness, I am thrilled to share the remarkable success we've had. Not only have we had some great trades, folks, we managed to go 15 in a row without a loser. 15 in a row without a loser. That's right. So to celebrate, I'm going to do something I've never done before. In less than 48 hours, that's right, today's Tuesday morning, in less than 48 hours, I'm going to give away a special gift to all who claim it. You claim it, I give you a special gift. We want to celebrate 1 year release of Pattern Trader. So to celebrate, I want to give you my biggest gift. You need to sign up. You're not going to get it just by sitting here. Sign up below the channel, below in the YouTube Wealth Press channel or below the video. I don't know where you're watching this video, so I want to make sure you get the link. If you're watching it on the Wealth Press or Roger Scott site, just follow below the link below the video. Or if you don't know where to find it, go to the YouTube Wealth Press channel and click the link there. Make sure to subscribe to our Telegram by going to rogerscott.com/Telegram. Like our channel, subscribe to our channel, and post comments under the questions. I respond to all of them every day. I'll see you later. Have a great Tuesday. And don't go frisky with those tech stocks because there's a lot of negative news that could be coming our way, which will take them down. Bye.